MMTs, this is the Dow 60-minute chart, and on 826, unlike the S&P, we had put a major gap down reversal. We went right up here to 1145. I'm just showing where that last low was here on the Dow. Okay, now as I move over here on the chart on the Dow, this is that bar, 11,149.22 is a major level that we're going to be looking for on 9/6 Tuesday morning on the opening bell. We're going to monitor that the Dow had put in its bottoms over here around that 10.7 handle, but we had rallied up like always, but we given it back, and we had a knife hook. We had a rally, but look at each gap down, that this high was expansion from the previous lows, meaning that knife hook drop up to the high up here to 11.7, and we're at 11,240 over here on the 60-minute chart. Now, when it comes to tomorrow morning, on Tuesday morning, we're going to be looking for key Pacific areas of where we would have a gap down in the Dow on the opening bell. And right here at 11,000, like I said, this half bar is going to come into play. At this half bar right here is 11,061, this half bar. That's the 826 half bar. 11,061.48. Granted that the Dow closed at 11,240, down 253 handles on Friday, DJI. This is the Dow 60-minute. Now, we've had September 1 and September 2nd in the selling mode. The next area of support is we're going to come over here, MMTs, on the Dow. And I'm just going to blow up this part of the chart. We already know that 11,061 is going to be a major area of this half bar. We do know that there are other half bars that had come up off the bottom. This first breakout bar at 10,898, what will be the lower level. There's another level right in here at 10,955.39. And then ultimately that third 60-minute breakout bar here is going to be 11,013.42. Okay? And the thing about it is, on a Tuesday morning, on a light holiday, volume sell-off, that Tuesday morning will be the third actual trading day of the month of September. These key lines are going to be the key support lines that we gap down and we continue to sell down. It's when they're going to perform that bottom-up trade like this one. And what we would prefer to see on the gap down on Tuesday morning, we are calling for a gap down Tuesday morning now. Okay, today is Monday. Happy Labor Day to everyone out there from SMF. Time is 11:42 a.m. 9/5 of 2001. The gap down sequence opening would mean a third day of price decline in the Dow. And we would like to see in the morning on the gap down is where that buyer is going to step in and where we're going to hold these support levels or sell down to these major support levels that had started this initial 60-minute trend up. Here is where we had another huge gap down on a Friday. Dow was down 224 points, had a 400-point swing, came straight up, got above this half bar here. So when we come down and test these half bars, they have to bounce on a 3-minute, 15-minute, and naturally it shows up here and the underlier of the 60-minute. Now, having said what the 60-minute looks like, when one really gets down to the fact that you take a look at a daily, and this was your daily highs, and I just blew this up so people can see it. The important thing that we must be coherent of is where the daily half price action down bar is going to hold. And the thing about it is, on a daily, each one of these lines are 114.19. Yeah. And that means that when we take a look at the volatility, we know what the volatility is. I have made it where that the Dow diamond closes right here on a 20-day simple moving average. The Dow daily over here is 127. That's half of the bar. This half bar over here, 11,015. That's where we started that daily up move. We're going to be watching where the Tuesday morning gap down in the Dow would undercut that, and where we're going to end up getting the full load of this last bottom that was put in the dog days of August that we called for. From the greatest short that we had went down. It's all on stock market funding, folks. Go get a grip and let's start there. I've got 11,000 right here on this bar on 811. That's 11,004. This half bar over here at this bottom is 10,957. That's going to be a major one. This half bar over here was 10,924. And naturally, this was 11,121 on the Dow. But you can see where the lower end of that bottom range was put in. This is where the Dow made its great stance at 11,015 on a daily bar. And we closed above half of that daily bar. We came right up here to where we said we would have reversals. And we have reversed. We're down here now. That was the high reversal. We're down here now. This bar, Ken, flag is 11,015 on a daily half. If we come down and we break that, well, then we got to start doing other things. We've got to start going back in further time. What I can say over here, I gave those numbers out. This is a Dow 60-minute. This is all short term. When we gap down, 9.6 of 2011, and today is 9.5. There's no stock market open at all right now. But the thing about it is, when you get over to the Dow Jones weekly, you're going to gap. If you gap below that 100-week moving average on a standard thing, this is all standard, that 100-day simple moving average has to be, imagine that, 11,105. A sell down and the 200-week moving average, which is a major moving average at 10,704.83. That's this declining weekly moving average. Let's not forget about the 10-week about to cross over that pink line, which is the 50-week. And when you descend in weekly moving averages, as my SMF MMTs have been taught a different way than anyone else about how to work with mathematical equations within the weekly moving average structure to come down and pinpoint where the relevancy between weakness and strength, that certain critical areas of price support are going to hold or are going to break. It's very important to understand where that weakness gets built in, and then we overshoot that downside and then have a reversal. We will be monitoring this very closely below the 100-week. We are short term on this line here. We are minus 164.66661. So that means that when the greater the negative value, the shorter term, that the bottom, so when you do gap down, you'll bounce off these trend lines, or they sell down to the next support line, and we will monitor using everything in the SMF platform on how this handle holds at these key areas right here. Here's that 11,100. Well, that's right here at this major breakout bar to that high. We're going to test that. Obviously, the 100-week moving average is at 11,105. I mean, our platform is awesome, man. It's already got that 100-week moving average priced in the market maker trading price action lines of support and resistances and how things are going to work. I'm sorry, there it is. The 200-week moving average, of course, would be somewhere down around here. That's 10,920. You got to break below the half bar here to get there. Now on the opening bell in the Dow, we gap down, and if we close below the opening gap, if we gap below 11,105, the 100-week moving average, and we sell down through this half bar here, and you can see the expansion here. You had 1, 2, 3 of those. A fourth delta is 57.10 per line. And so when we gap down in the morning on Tuesday, we look to see where we get that knife hook bounce or not, or do we sell down to the lower areas in our platform using the 60-minute. And here is the daily standard technical analysis chart. We don't make decisions on there, but the Dow is at jeopardy of a gap down and major selling at certain stop market levels. Short term, we're going to get oversold, but let us not forget, you can stay oversold for a number of days. You stayed overbought up here. Yeah, you stayed overbought up at the highs of the Dow at 93% DS for a number of days within the weekly cycle. But now, on the flip side, on the downside, we're at about 29.54% DS. We can stay oversold down in here, but we will hit where we have a turning point at one of these gap down lines for Tuesday morning.